Welcome to this FX Corner session. Today I have the great pleasure to invite one of our members of ATEL, Jean-Philippe Bernard from John Deere. Welcome. Jean-Philippe, maybe a first question before starting with the question related to FX. Could you just describe your role and the company for those who do not know yet John Deere?
So John Deere, we build tractors, very good one, obviously. And here in Europe, we are taking care of the treasury for EMEA, a bit of APAC as well. And we are working in cross-function with the South and North America. So here, as a function, I'm leading the team locally. And we are also running the cash pool of John Deere, one of the biggest cash pool of John Deere here in Europe, which also serve as a FX hub, which is why you're hosting me. So thank you so much.
And I guess a multinational companies having worldwide activities, even if it's mainly in the US, mean that you have a fixed risk. So let's come to the topic. So how could you describe the approach of FX risk at John Deere, and especially in your function here in Luxembourg?
I would say it's pretty dual because you have a portion which would be very integrated for all the, let's say, developed countries. So mostly, I would say Occident, a bit of Brazil, a bit of Asia. For example, China is very integrated. On the other hand, you have some units which are really on a standalone basis. So this is really like two different ways of managing FX. And then on the third layer, if you think about the business itself, you have the forecast approach, which is one strategy in itself. You have the funding approach, which is another type of strategy. And then when you come to the cash itself and the flow of FX and settlements, then this is again another strategy. So we speak about three different strategies in two different words.
Okay, and is your FX risk management fully centralized? You partly answer the question. Do you have an in-house bank working for taking care of this specific risk?
Yeah, so that's the way we work in John Deere. We have John Deere Cash Management, which is a company I represent, which is the cash pool of John Deere here in Europe. But it's not only taking care of Europe per se, because we have activities with South America and Asia, APAC, etc. The main purpose of this cash pool is not only to manage the liquidity, not only to manage the funding, but also to manage the currency pair between each unit and make sure that we optimize the flows. So that's really our goal on a day-to-day basis.
Okay, quite comprehensive. And so what are the main issues your company is facing, especially regarding the FX management? Let's say more specifically, what are the challenge you are facing on a day-to-day basis with this type of risks?
I would say that on a day-to-day basis, the main issue is how do you make sure that you have the right information at the right time to take the right decisions. And this goes all, and I'm pretty sure we can go forward in the discussion on this topic, but these go all into the big data and your data lake, and how do you manage the informations? How do you get it in the system fast enough so you can react in time, or even be proactive and decide maybe other strategies or other coverage. So this is definitely the biggest difficulties, I would
challenge.
say.
Access to data, standardization of data,
yeah,
to make use of it. Very interesting. And so do you consider that your FX management is fully automated? Is it optimal, or is there room for enhancement?
So I'm a true
It's a tricky question.
Yeah, I'm a true believer of automations, and
okay,
I used to say I'm a lazy guy, so anything I can automate, I automate.
Okay.
And I can say that FX, there is a room, like a word of improvement, the way I would see it. So again, I would go back to this data lake. Today we are able to anticipate flows 2 days in advance for the short term and the funding piece. The forecast is another topic. I would most probably not talk much about this one. But for the short term and the funding piece, we're able to anticipate 2 days in advance, which is good. But it requires a lot of manual work. And to my perspective, this should be an automated work. It should be automated data feed in the system, automated reaction of the system telling you, okay, these are your opportunities of hedging, opportunities of natural hedging. this is what I would expect from the system, and we are not yet there.
First comment from my side, you're not the only one to have this kind of answer, so the world is not perfect, so let's try to improve and to further optimize the automation. But what is quite interesting, so you mean that this pre-trade phase, the feeding of information via your 200 subsidiaries across the world, is quite important to make sure that you have the information in due course and you can react fast, because we know that per essence for FX, time is really a key issue.
It's very sensitive. It's money and it's very sensitive. So the way we work, again, I go back to my initial statement. We have two words within Deere, the one which is fully integrated, the one which is fully not. For the one which is fully not, it's pretty simple. It's standalone, so it really depends on the units. The exposure, it's pretty limited, even if they have big flows compared to the worldwide.
They follow the strategy defined as well.
It's pretty simple, not optimum, but pretty simple. For the one which is integrated, we have a first layer of what we call source landscape, which is our accounting systems, multiple accounting systems, which feed our TMS, which also is an SAP base mostly. And when we got this information at the TMS level, then we take decisions. The way we work is within our strategies, we require this 2 days lead time between the moment we feed the system and the time the settlement of the transaction happen. These 2 days is the time we have to figure out the exposure, see if we can potentially net hedge it, or go on the market and get the right actions.
So potentially you net the hedging if you can. You also told me that you try to bulk, or it's not a one-to-one approach, you try to be efficient. And as you rightly say, so even the best TMSs in this world are not able to cover everything, so you need to add some, let's say, extra solution or extra Excel workload just to make sure that you get the information and the appropriate reporting.
I would say that again, we go back to this big data analysis and this data lake. I started Treasury, we were doing around, in the cash pool, something like 50,000 transactions a month, not more than that. Now we do much more than that on a daily basis. So we are not exactly speaking of the same level. And again, it's all about how do we get the information at the right time, at the right place, so we can take the right decisions. And that's where it's kind of complicated. For example, for the netting part, if we say, are we doing on a bulk or not, we are a cash pool. So we agglomerate all the data and the cash from all the units worldwide, not all the units, but most of the units worldwide, in various currencies. Then, because we have this various exposure, then we are able to net them and decide what the cash pool would hedge. We don't need to go on a one-to-one basis just to hedge one specific unit, because we manage the liquidity. Okay. Then again, on the forecast perspective, it's not part of the cash pool, it's part of the unit, so it would be on a one-to-one basis. So it really depends.
But you need one by one, or you net one by one, or you have a multilateral monthly netting, as some companies are doing?
So we do netting on a monthly basis.
Okay, to net the interco position
exactly.
And potentially in currencies. I don't know who is selling in which currency. Okay, and on top, when you can net two exposure that are naturally hedgeable, so you do so. You try to be optimum.
But again, we as a cash pool are not only a cash pool. We are in-house bank. You bring the topic.
Also funding.
Exactly, and also managing payment on behalf, receipt on behalf. So we may have a unit in the US which may pay some supplier in Europe or in India. They would use a cash pool in Europe. We would manage the pairs and make sure that by the time we receive the request of payment, the cover is made in the given currency. Yeah. This is our daily job.
So it brings us to the next question. So in terms of, apparently you have policies, I guess you have policies, depending on the underlying risk, because you say it could be funding, it could be transactional risk, it could be also translation risk, but I don't know if you cover that risk. And what about the strategy? So you have predefined strategies, so, and without entering to the detail of the strategy, but I guess that you follow these two guidelines to make sure that you respect the policy, because you are a publicly listed companies in the US, So I guess you have to disclose some information to the market, to the
Correct.
investor. It should be properly aligned, not to have a surprise for the investors.
Correct. So I would say the first layer is we are a publicly listed company. So we need we have a certain set of disclosure, of regulations that we need to follow, and we follow closely, exactly. But on top of that, based on what we need to disclose at the end of the year, we build our strategy to make sure first we cover the risk, but also make sure that at all time, whatever happens, we have a kind of guidebooks on which we can rely on based on, again, I would go back to these two words in Deere, fully integrated or not. So the strategy may vary based on the unit or based on the currency, but again, it's pretty well defined in a way that it would never take risk or put risk for John Deere. And this is the biggest point. We are a very conservative company. We really care about our customers, our shareholders, and our first goal is really to make sure that there is no risk whatsoever.
And by the way, you are probably rated.
Mm-hmm.
So if you are rated, you have also the rating agencies that
Yes.
will check that the policies are properly applied. So very interesting. So we cover the point about netting, multilateral netting and netting. What could be a final comment on FX management? Because usually our members are facing some difficulties. We mentioned some of them. So the lack of ad hoc tools. So we have a lot of tools, but a bit too generic, and so there's always missing piece depending on the type of reporting. So I would say problem is pre-trade. We've mentioned identification, standardization of data. A lot of things still done on Excel. We have to confess that it's a common theme. What are you comment? Of course, you integrate with platform for dealing online, I guess. But what are the let's say the areas where you can see some potential improvement and things that could be done better?
I would say on John Deere, as I mentioned before, it's big data, managing the flows. This is, I would say, in my perspective, again, the biggest opportunities. On a general basis, what I would advise any treasurer to be vigilant at is we should be, let's say, outside of data and outside of technicalities. And that may sound weird for FX, but the main drivers why I'm saying this is because if we think about the funding piece or the short-term piece, normally you should not have FX. You may have a tiny little noise, but you should not have FX. And someone which is really close to the ground with basic logic, with really good logic, would not need any technicalities or any system to make sure that you don't have FX. So, and that's why the comment I would say to treasurer is really, sometimes it's good to step back, think with just being pragmatic, think step by step, put them into pieces, and we take better decisions rather than trying to chase the best ERP system, which potentially would do everything, which does not. And at the end, it would be kind of not achieving the purpose. So first building the good logic, and then optimizing it with data, with ERP.
Yeah, because I guess that you will agree that with the FX, we have an opportunity to create value for the affiliates. Because we are always talking about the added value treasury could bring to the operation. I think it's typically a good area, a good example.
I think one of the, I always remember one of my treasurer in the US was telling me, but JP, treasury is a cost for the company. So you would never see a John Deere customer buying a tractor because we have a good treasury. And I was like, well, I think I disagree with that, because we as treasury, we are a business. So what would be the value, the cost of all the liquidity, FX management, and so on, of all the companies without us, and what do we bring on the table? And if we monitor that, then we do the right things.
Yeah. It's always the same question. So are you a cost center? Are you a service center? If you are a service center, you can render a better service that could help by reducing the price, being more efficient, and at the end of the day, it's all benefit for the customer. Maybe a final comment. So we both agree that TMSs are not perfect. The perfect or ideal world doesn't exist. So you need to find ways, the last and ultimate recourse will be Excel to complement the existing solution. Because one thing is really missing in my view, it's the decision making. So TMSs claim that they are decision-making tools, but they produce some report that could be partly helping you in taking decision, but they don't take yet the decision for you. So maybe AI could help in the future to automate the decision process or simplify your decision-making processes.
I would say yes and no. It would be the same thing as buying an apartment, brand new, would be built and you're super happy, but then you don't look at the blueprint. You can trust the builder, but you may want to check at the blueprint. So the reason why I really love Excel, even though I want to get rid of it every single time, is because Excel is blueprint. Is you build the logic.
Build what you would like to get done by a machine.
Yeah, and you got the logic, like where are the data coming, what would be my output? This is kind of the sandbox. AI, we have AI integrated within John Deere, and it's exactly the same thing. You need to train the AI. But the issue is when you start to give the AI decision to someone else, you don't know how the tool was built, how the tool was trained. And this would be, again, the same thing as buying an apartment without looking at the blueprint.
That could be our takeaway. Let's say, try to think about building your own blueprint. Excel could be great for that, but it has some limits. So it could be a starting point just to implement a machine and make sure that the solution will deliver the expected result. Thanks a lot for this interesting information, comment and tips. So I hope that you will enjoy this session as I did.
Thanks a lot.
Day.